Where do I see financial crisis? So England won. The dollar in itself is a crisis. The surging dollar in itself is a financial crisis in itself, because it has already sank two nations in the world, emerging markets that have both required bailouts. So what is deemed the banking crisis of 2008, which was contained heavily to the housing market, now you have a financial crisis that is linked to the strong U.S. dollar globally. And you are seeing two nations now panicking, G7 nations panicking to defend their currencies and to pivot on their monetary policy in order to protect their currency against a declining U.S. dollar. This is a global financial crisis. This is not contained to just the United States. The strength of the U.S. dollar is a major threat to stability around the globe. This happened in the early 1980s and ultimately ended with what was known as the Paris Accord, where the United States engaged in a process to effectively weaken its dollar. And then we had to turn back around and strengthen our dollar heading into 1987, and ultimately one thing led to another, and we had a massive crisis in 1987. Crisis builds on crisis. That's the most important thing to learn about financials in the world today. The crisis that we are in today is the result of the reaction to the Federal Reserve's policies in 2008. Well, really, it's a reaction to 2014's European crisis, where the Federal Reserves of the central banks of Europe said, we need to effectively abandon austerity. We need to build out our balance sheet. And they did. They printed money. And that was in reaction to 2008. 2008's crisis was in reaction to providing a significant amount of liquidity to the market that ultimately fueled the housing bubble. The housing bubble was created by the Federal Reserve, which ultimately goes back to the dot-com bubble. The dot-com bubble was fueled by previous economic expansion of the 1990s, which endured crises in 1997 and 1998 in Russia, a couple other places around the globe, ultimately manifesting in long-term capital management's collapse and nearly sinking the global economy. That was also a part of an ongoing period of the United States Federal Reserve, increasing interest rates, which ultimately sank Mexico's economy in 1994, leading to what was known as the peso crisis. That crisis was born out of the recession from 1991, which was born out of the crash of 1987, which was born out of the Paris Accord, which was born out of the 1981 moves by Volcker, which was reactions to the 1978, 1975, and 1973 recessions, which were direct results of broad economic expansion and direction of government spending that were led through the 1950s, which was led through the 1946 mini depression that transpired after a war in 1945 going back to 1941. That was a direct command economy that was ultimately driven partially by the depression that transpired from 1929. That depression was a result of cheap monetary policy going back through the 20s from the Federal Reserve, which comes on the back of the World War I, which had its own financial crises, which ultimately was why before that the Fed was created in 1913-14, in results to a number of panics that transpired in the United States economy, like 1907 in the late 1890s, which was driven by bank crashes and an ongoing great long depression that was caused and ultimately led to significant levels of distrust among states, which helped fuel the Civil War and ultimately the bond crash that transpired in the 1860s. That was long before the 1830s, and the national banking crisis that transpired in the 20s, part of Andrew Jackson's moves. And all of this goes back to just the basic foundation of this country. If you want to blame this year's financial crisis on it, blame it on the Revolutionary War. That's the argument. Like, every financial crisis every policy decision creates a new financial crisis. And there's a great book on it. I don't have it in front of me. I'll find it. I'll bring it tomorrow. But the point of it is, like, the world is always in crisis. It's always in crisis. And there's always a policy reaction that creates a new policy problem somewhere else. So the policy problems that are transpiring today with Europe are likely going to manifest into other problems down the line. The supply side problems that we have in the United States today are likely going to lead to other potential problems down the line. But right now, the tools that they have are largely theoretical, and they're going to spit them out, and we'll see if they work.